Hello everybody, this is 3SP, and I'm coming to you with another update. This one comes from CNBC. Dow falls more than 100 points as North Korea tensions linger. Traditional safe havens have seen solid inflows as tensions have increased. Equities, meanwhile, have slipped across the world but haven't posted a meaningful pullback. U.S. equities fell on Thursday as tensions between the United States and North Korea persisted. The Dow Jones Industrial Average fell about 130 points, with Goldman Sachs and Apple contributing to the most losses. The S&P 500 declined 0.8%, with information technology and financials leading the sectors lower. The Nasdaq Composite pulled back 1.2%, with Apple, Alphabet, Amazon, and Netflix all trading lower. The CBOE Volatility Index, or the VIX, widely considered the best gauge of fear in the market, soared more than 33% to trade at 14.8. Earlier this week, President Donald Trump said that North Korea would face fire and fury if it continued to threaten the United States. However, North Korea has dismissed these warnings by the U.S. and Cuba as a load of nonsense. The iShares MSCI South Korea Capped Exchange Traded Fund, which tracks South Korean stocks, fell 1.7% today. Traditional safe havens have seen solid inflows as tensions have increased. Gold futures have risen nearly 2% this week, while the Swiss franc has advanced 0.7% against the US dollar. We're through most of the earnings season, and the valuation in the stock market became a bit problematic when you have something like North Korea come up, said Mars Og, president at Tower Bridge Advisors. Equities, meanwhile, have slipped across the world but hadn't posted any meaningful pullback since the two nations started taking verbal jabs at each other. The S&P was only down 0.1% for the week entering the session. In Europe, the Stoxx 600 index has fallen 1.2% for the week. Our assumption is that the battle of the bombasts will remain verbal for the foreseeable future, and that Guam will drop out of the headlines as quickly as it has been inserted into them, Michael Saul, chairman and CEO of Marketfield Asset Management, said in a note. It remains possible that we will see another brief lurch downwards, particularly in the technology sector that seems to be the locus of hedging activity. But the chances of this developing into meaningful correction still looks remote at the current time, Shaw said. Investors also kept an eye on tech stocks as the year's best performing sector dropped more than 1%. The sector seemed a little crowded, Daryl Cronk, president at Wells Fargo Investment Institute, told CNBC's Squawk on the Street. When you look at active managers positioning today, they are 30% overpositioned to a historical norm. Wall Street also turned its eyes to retail earnings as Macy's and Kohl's both reported better than expected quarterly results. Dillard's, however, posted much weaker than expected results, sending the stocks down 15%. Calendar second quarter earnings have been mostly better than expected, with growth surpassing initial expectations and most S&P 500 companies topping profit and sales estimates. The positive earnings helped lift U.S. stocks to record highs last week. The Dow broke above 2,200 for the first time. Now, again, don't let this current situation discourage you, because that's basically what our economy is based off, is how you feel about the current situation. I think the certain managers right now are making good predictions that this is basically just words. I mean, because the U.S. has been sending and doing drills, but sending planes and ships over into the area because this is our normal annual drills that we do with South Korea. And we've been receiving these same threats from North Korea for about 50 years now, since the 50s, actually. So this isn't much to worry about. I believe that cooler heads will prevail. And I do agree that something needs to be done about North Korea, but I think we still have space for diplomacy. And we're still above where we would be if Trump wasn't in office anyway, because the market has been rallying around his positive attitude toward the economy. And still, I think it's going to still increase. Jobs are still going to increase. But in all things, we need to pray. Pray without ceasing. That's what the Bible tells us. Pray without ceasing. So right now, just stay in prayer. And God will do exceedingly and abundantly above all that we can ask or think. And this is 3SP signing out.